What if the future of money isn't controlled by governments? What if the currencies you use, the savings you hold, and the debt your country owes are all heading toward a breaking point? And what if the technologies built to free us from the financial system are quietly merging with the same forces that once controlled it? Because right now, two powerful forces are colliding: the unstoppable rise of cryptocurrencies and the explosive surge of global debt. One promises liberation, the other threatens collapse, and together, they may redefine what money even means in the next decade. Tonight, we uncover a hidden story: how financial systems, digital currencies, and debt supercycles are converging, and how this convergence may create a future far stranger and more dangerous than anyone expects. This isn't just about Bitcoin. This isn't just about governments printing money. This is about the end of the old world of finance and the birth of a new one. But to understand where we're going, we need to understand how we got here. The system we inherited for centuries, money was simple: gold, silver, land, and physical assets. Then governance stepped in. They issued currency. They controlled supply. They've regulated credit. But something changed after World War II. The global economy became addicted to debt. Countries borrowed to rebuild. Corporations borrowed to expand. People borrowed to survive. Debt became the engine of growth. By the 1970s, the dollar was no longer backed by gold. Money became a promise created by banks, multiplied through loans, and supported by nothing but confidence. And as long as confidence stayed strong, the system held. But in the shadows, inflation quietly ate into savings. Governments accumulated unimaginable debt, and central banks turned into the most powerful institutions on earth. This system was stable until technology arrived to challenge it. Silent at first, then louder, then unstoppable: cryptocurrencies. But to understand why they matter, we need to go back to the moment everything cracked. When trust in money collapsed, the seeds of cryptocurrency were planted in 2008, the year the global financial system nearly died. Banks collapsed. Markets froze. Governments bailed out trillion-dollar institutions using taxpayer money. For millions, trust in traditional finance shattered. But in that chaos, something revolutionary appeared: a 9-page document, posted anonymously, signed by a name the world still doesn't fully know: Satoshi Nakamoto. Bitcoin wasn't just a digital currency, it was a statement, a protest, a rebellion, a blueprint. Money without banks, money without governments, money without permission. A system where no one could create an unlimited supply. No one could fake numbers. No one could manipulate value behind closed doors. Bitcoin was the first crack in the old system's armor. But it wasn't the last. The crypto revolution: Bitcoin was the spark. The blockchain was the fire. Suddenly, thousands of developers, entrepreneurs, and dreamers saw a new financial world. Ethereum introduced smart contracts. DeFi introduced decentralized lending. Stablecoins introduced digital dollars. NFTs introduced digital ownership. DAOs introduced digital governance. Crypto became more than money. It became an ecosystem. Yet something else was happening behind the scenes. Global debt was exploding. In 2000, total world debt was $80 trillion. By 2023, it surpassed $307 trillion. Countries printed money to survive. Corporations borrowed to grow. People borrowed because they had no choice. Debt was no longer a tool, it was the foundation. And cracks began to appear. The rise of crypto wasn't random. It was a reaction to a world drowning in debt and inflation. But the greatest twist was still coming: the collision of crypto and debt. As global debt grew, governments faced a dilemma. Raise interest rates gives risk collapse. Lower interest rates gives fuel inflation. Impossible choices, dangerous consequences. Meanwhile, crypto is gaining power. The intersection of traditional currencies and global debt raises important questions about the future of money. Will traditional currencies continue to dominate, or will alternative forms of currency gain traction? What role will cryptocurrencies play in the future of money? These are questions we need to explore. Cryptocurrencies are changing the financial landscape in many ways. On the one hand, they offer a level of decentralization and autonomy that's hard to find in traditional currencies. Transactions are recorded on a public ledger called a blockchain, which provides a level of transparency and security. Cryptocurrencies also have the potential to increase financial inclusion, as anyone with an internet connection can participate. However, there are also risks associated with cryptocurrencies. Their volatility can make them unpredictable, and their lack of regulation can make them vulnerable to scams and abuse. The connection between cryptocurrencies and global debt is complex. Some argue that cryptocurrencies can help alleviate debt by providing alternative financing options. Others see them as a threat to traditional financial systems. The relationship between cryptocurrencies and global debt will play a crucial role in shaping the future of money. Cryptocurrencies have the potential to disrupt traditional financial systems, but they also have the potential to provide new opportunities for economic growth. The potential future scenarios for money are vast and varied. One possibility is that cryptocurrencies become a widely accepted form of currency, challenging traditional currencies and changing the way we think about money. Cryptocurrencies such as Bitcoin and Ethereum are gaining popularity and acceptance, offering an alternative to traditional fiat currencies. Bitcoin is not controlled by any country, not influenced by any central bank, not dependent on traditional systems. Bitcoin became digital gold, Ethereum became a digital economy, stablecoins became new digital dollars. For the first time in history, money existed outside governmental control, and governments noticed. China banned crypto. The EU demanded regulation. The US cracked down on exchanges. Central banks accelerated CBDCs, central bank digital currencies, a digital version of national money, programmable, traceable, fully controlled. And this is where the collision begins. Because cryptocurrencies challenge state power while global debt threatens state survival. Governments cannot allow financial collapse, but they also cannot allow money they don't control. So what happens next? When two financial worlds collide, here's the truth. Crypto threatens governments. Debt threatens everyone, and both are expanding faster than the world can adapt. We are entering a new financial battlefield. State money versus stateless money. On one side, governments, central banks, CBDCs, and traditional finance. On the other side, Bitcoin, DeFi, stablecoins, digital wallets, borderless transactions. The fallout has already begun. Banks are losing depositors to crypto. Governments are losing control over capital flows. Young people prefer digital assets to traditional savings. People in crisis countries rely on stablecoins more than local banks. In places like Argentina, Nigeria, Turkey, and Lebanon, crypto adoption is exploding because their currencies are collapsing. People no longer trust the system that runs their lives, and the system no longer trusts people. This is the fracture that could redefine the future. Why the world can't solve the debt crisis. Governments have tried everything: printing money, raising rates, lowering rates, stimulus checks, quantitative easing, quantitative tightening, austerity, bailouts, regulation, deregulation. Nothing worked. Here's why. Debt doesn't reduce, it compounds. Inflation doesn't disappear, it shifts. Banks don't stop risking, they innovate new risks. And cryptocurrency doesn't die, it adapts. The financial system is not designed to fix debt, it is designed to generate debt. And that is the flaw at the center of everything. History is repeating. Look closely. Today mirrors the past. 1929 gives currency collapses. 1971 gives end of the gold standard. 2008 gives banking collapse. 2020 gives money printing explosion. 2023 gives global debt crisis. Every collapse created a new form of money. After the Great Depression gives government bonds. After World War II gives the dollar system. After the 1970s gives fiat currencies. After 2008 gives Bitcoin. After COVID gives CBDCs and digital assets. Every crisis births a new monetary world, which means the next one is coming, and cryptocurrencies are no longer just an experiment. They are a candidate for what comes next. 3 takeaways. 1. Money is no longer stable, it is evolving faster than governments can control. 2. Cryptocurrencies are not a bubble, they are a reaction to a world drowning in debt. 3. The next global financial shift will be digital. The only question is, who will control it, governments or the people? Final warning: we are entering the most uncertain financial era in history. Global debt is unpayable, cryptocurrencies are unstoppable, governments are losing control, and ordinary people are caught in the crossfire. The future of money will be digital, but it may not be equal. The old world is collapsing, the new one is still being built, and none of us know what it will look like. Call to action: if this deep dive opened your eyes, hit like, subscribe, and share this video. Because the future of money is already here, and we're just beginning to understand it. Stay curious, stay alert, and prepare for a world where money itself is reinvented.